Hey, what's up guys, John here. The Dow Jones just hit the highest point in world history, 40,000.
History for the stock market and possibly your 401k. Today, the Dow topped 40,000 for the first time ever.
It's quite an accomplishment. That would only happen in the best economy ever, right? Where record low unemployment, really strong job market, everything's really good, low inflation. Or are we walking into something really big here? Because when you look at what China is doing, you look at what central banks are doing, you look at what Michael Burry, what they're all doing the same exact thing. China just sold $53.3 billion worth of U.S. treasuries, and they purchased gold bars. Michael Burry purchasing gold bars at a record level. Central banks buying gold bars. Why would they do this if everything was great? Well, what if I were to tell you that we're walking into some significant headwind in the U.S. economy? President Joe Biden just announced tariffs on China, sweeping tariffs. EVs, electric batteries, solar, steel, aluminum, really a major blow.
President Biden raising tariffs on several Chinese imports.
President Biden is taking a hard line on Chinese imports, charging a 100% tariff on electric vehicles.
A major blow for America and for China on these tariffs, and they're retaliating by selling our debt. But America needs to sell about $11 trillion worth of this debt every single year from now until 2030. And when you have the relationships getting severed with Russia and all these different countries, us weaponizing the dollar, well, what's going to happen? It's going to be harder to sell that debt. And if it's harder to sell this debt at where interest rates are now, they're likely going to have to increase rates to entice buyers to step forward to acquire it, thus changing everything we know about the U.S. economy. So is this 40,000 going to go to 41,000, or are we going to see a substantial drop in the Dow and the greatest rug pull ever in America? Well, in this video, I'm going to show you exactly what's going on to help you and position you. I believe that they're all buying gold right now as a safe haven asset because things are probably going to hit the fan. And when things do hit the fan, gold traditionally does extremely well. Look at what it did in 2008. I mean, it was like a rocket ship. It more than doubled. In 1970s, it went from looks like about 200 all the way to 800 and change, like a 400x or 4x. I mean, it always does well when things hit the fan. And I think that this is all happening at the same time for a specific reason. It's not just random. I'm going to show you what's going on. Please hit the like button, YouTube, share the content, educate more people about what's going on in America's economy and the world economy. If you'd like to fix your credit to position yourself what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow, for Friday, before the weekend. Take a look at this. So in China, sells record sum of U.S. debt amid signs of diversification. So this is Bloomberg. China sold a record amount of treasuries and U.S. agency bonds in the first quarter, highlighting the Asian nations' move to diversify away from American assets as trade tensions persist. Beijing offloaded a total of $53.3 billion of treasuries and agency bonds combined in the first quarter, according to calculations based on the latest data from the U.S. Department of Treasury. Belgium, often seen as a custodian of China holdings, disposed of $22 billion of treasuries during that period. China's investments in the U.S. are garnering renewed investor attention amid signs that tensions between the world's largest economies may worsen. President Joe Biden has unveiled sweeping tariff hikes on a range of China's imports, while his predecessor has said that it might impose a levy of more than 6% on Chinese goods if elected. As China is selling both, despite the fact that we are closer to a Fed rate cut cycle, we are not. That, and I want you to know that. I want all of us to know that. We're not anywhere near a rate cycle cut. They've said this, and they've been saying this for the last 18 months. This wasn't just, in December and January saying, no, it's going to happen in April. It's going to happen in March. No. This has been 18 months saying that we're going to see a rate cut cycle. It's going to be coming. It's going to be coming. Look, we're not near it. We're not. And when you start to look at where we're actually going, it's going to be the opposite, more likely. There should be a clear intention of diversifying away from U.S. dollar holdings, says Stephen Chow, Chief Asia Foreign Exchange and Rate Strategist at Bloomberg. China's selling U.S. treasuries could speed up as U.S. trade war resumes, especially if he returns as president. With China selling dollar assets, its holdings of gold have risen. The nation's official reserves, the share of the precious metal in the reserves climbed 4.9% in April, the highest according to the central bank going all the way back to 2015. China and countries with close ties to it have increased their holdings of gold and foreign exchange reserves since 2015, while countries in the U.S. bloc have kept them broadly stable. Now, look at this. You have central banks, they say they're buying momentum into 2024, and one of the main reasons is because worldwide tensions. I would say it's going to be because of a erosion in the purchasing power of the dollar coming over the next several years, and they want to acquire gold at a lower basis than what they would probably be buying it for in a year, 2 years, 3 years. Now, what I believe could happen if we're unable to sell our debt and we're unable to find these buyers and we have to make the sale, and these banks, 1,804 banks, borrowed from the Bank Term Funding Program $161 billion. And how this worked is these banks that were struggling last year after Silicon Valley fell, they got a phone call. They said, hey, look, you're holding, X amount of, losses right now. We'll give you the money you need. You just can't sign us over those assets that you're suffering holding right now, and we'll give you 100% of what you paid, or 100% of what the value is that you say it is. And then in a year from now, you give us the money back, and then we'll give you your assets back or your liabilities back. Well, when interest rates are not going down, instead the economy is getting worse, and we have hundreds, 1,800 banks that borrowed this money. There's going to be hundreds and hundreds and hundreds of banks that are going to be unable to strike that check. And so you're going to have a lot of these banks that are going to be selling off assets at the same time. And so supply and demand, it's going to be a race to the bottom for a lot of these assets, especially commercial real estate. So when you start to look at this came out today, U.S. bank failures could surge by almost 50. Now, I think it's going to be a lot more than that. I believe it's going to be a lot more than that. CEO of the largest real estate company in America, one of them, Starwood Capital, they have 115 billion in assets under management. They're predicting that we're going to see one every day, possibly, or at least 2 a week. That's what they're predicting. Meanwhile, their REIT is getting, they're getting more withdrawal requests. People are trying to pull their money out at a faster pace than they can manage, and they're walking into some really big problems with it. The dollar's central role in the world trade might also be undermined. Higher government borrowing costs could also make it more expensive for companies to issue bonds, take out loans, as well as raise interest rates for consumers taking out mortgages or using credit cards. That's if we cannot sell those 11 trillion every single year, which I personally think we're going to have a much harder time doing that, especially, China. There's a 40% drop in China's treasury holdings as of last year. They're continuing to sell. Michael Burry piles into physical gold fund. Right, 1 day ago, Business Insider, CNBC, Kitco, Benghazi, all these articles talking about what he's doing. Now, what I personally think is going to be very, very fascinating. I mean, this came out at the Real Deal Conference. Look at this.
On the banks, I agree. He said 500 to 1,000 bank failures. Absolutely. I think what he left out is there's probably going to be another 500 to 1,000 bank mergers.
Yep, 100%. Because there's just no way this doesn't happen. Jerome Powell himself said this. Janet Yellen said this. The IMF has said this. Everyone has said this. Last year, think about this. Last year was Silicon Valley, First Republic, Signature Bank, PacWest getting acquired by Bank of California. It was a nothing type of situation. 4 or 5 banks, right? When you're talking about 1,800 banks that owe money, and you're talking about the amount of pressure that's, the amount of losses being held by a lot of these banks right now, and interest rates not going down, there's no way that Barry's wrong and everybody's wrong. I believe we're going to see some really, really big changes. Starwood REIT quickly burning liquidity if the hot pace of redemption requests keeps up. For Starwood's real estate investment trust, the property fund may run out of credit and cash by the end of the year. So, and Barry has drawn more than 1.3 billion of its unsecured credit facilities at the start of last year, according to Financial Times, which looked at the property fund's latest public filing. The fund, managed by Starwood Capital, only has 225 million left in its unsecured credit facility, despite having never tapped it before last year. If S-REIT doesn't borrow more or sell some of its assets, it's on pace to run out of reserves before the end of the year. As of April 30th, S-REIT has 752 million in liquidity, split by 446 million in cash, the 225 million available on the credit line, and 45 million of debt securities available for sale. So you can start seeing some really, really big challenges and struggles with one of the biggest landlords in America. Now, this treasury sale that they need to sell, what this looks like is a record $8.9 trillion of government debt will mature over the next year. See the first chart below. The government budget deficit in 2024 will be $1.4 trillion according to the CBO, and the Fed has been running down its balance sheets by $60 billion a month. The bottom line is that someone will need to buy more than $10 trillion of U.S. government bonds in 2024. That is more than 1/3 of government debt outstanding and more than 1/3 of U.S. GDP. Repeat that trend every year for the foreseeable future. That's almost $11 trillion every year until 2030. That's happening at a time when foreign investors have been shrinking their ownership of U.S. bonds since 2015. So much for the theory that we should not worry about accumulating debt because interest rates would always be low. The theory that demand, any amount of U.S. debt was endless, will now be tested at a large scale. Either way, it meant that the federal government is refining its debt at a higher rate. So when you start to look at this, how do interest rates go down? How do interest rates go down? They don't just go down because the Fed decides to go down. If we can't sell this debt, we could potentially walk into a credit downgrade. And that would be an absolute nightmare for America. A default could prompt credit rating agencies to downgrade the government's credit rating. This downgrade would make borrowing more expensive for the government, potentially leading to higher interest rates on government debt and negatively impacting investor confidence. Now, what I believe will happen is as rates become a little bit more stubborn, inflation gets worse. I believe we're walking into stagflation. What we're going to start to see happen is more and more job layoffs. We're going to see the cost of living become almost unbearable and worse than what it is right now. And we're going to see these companies looking to automate their systems as well, or as much as possible, try to automate their process. They're going to be outsourcing more jobs, moving into any which way they can to automate their business. They're going to be doing it. You look at Amazon, look at Walmart talking about drones. They're already working on all these different pilot programs in different cities. We're going to begin to see all this because they're not going to have an option. It's going to be too expensive to borrow money, and they're going to see a consumer that doesn't have the money to go out there and spend like they were spending a few years ago. And so they're going to be restructuring their entire businesses. So I believe we're walking into a scenario right now where banks are in really big trouble, the consumers are in very big trouble, businesses are in very, very big trouble, and America is in very, very big trouble. So position yourself accordingly. I think gold's going to do really, really well. I think precious metals are going to do well. Safe haven assets. I think land is going to do well in periods of turbulence. And I just think overall, if you have a diversified portfolio in the sense of having some gold, having a little land, you're going to be doing a lot better than if you're sitting in cash, only cash, and you never invest over the next couple of years. I think cash dollars will see an erosion in their purchasing power over the next 5 years. If you just let that money sit, I'd be shocked if 50% of that was not eroded. The purchasing power, 50% was not eroded from now until next 5 years, 2029. So land, gold, silver, I think will do very, very well. It's not financial advice, that's just my opinion. During periods of instability, they generally do well. I think that if you do have cash and you're able to go out there and invest when people are concerned and they're unable to access liquidity, you're going to be able to pick up some insanely good deals. So sitting on some cash for the short term, being able to pounce on the opportunities is definitely going to benefit you. If you have any credit issues that potentially would get in the way of you getting financing, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow, for Friday before the weekend. Catch you next video.